Hello and welcome to systemgorilla.com. My name is Seb, and today I want to talk to you about the shockwave of autonomous driving, or why China is staying ahead of Germany. This podcast is intended for technically literate listeners and investors that will get some 5 tips of what to invest in right now. Enjoy. The autonomy shockwave, why China is racing ahead and what German automakers must do now. Let me be brutally honest, and this comes from decades inside the German automotive machine. We're losing momentum fast. The story of autonomy, connectivity, and next gen mobility is being written at lightning speed, and right now, China is writing most of it. While we in Germany still celebrate our level 3 premium systems, the competitive landscape has quietly shifted beneath our feet. A November 2025 industry study from the Center of Automotive Management was led by German professor Dr. Bretzel. It makes it painfully clear China controls roughly two-thirds of innovation strength in driver assistant and autonomous tech. Germany sits only at a quarter of that. That's not a gap, that's a warning siren. Germany's last prestige advantage and why it's not enough. Let's start with the good news. Mercedes still offers the world's most advanced Level 3 system, legally approved for real driving, the Staupilot, active up to 95 kilometers an hour, a true engineering triumph. BMW will join that league in 2026 with the Neue Klasse, new class architecture. But there's the catch. The advantage is prestigious, not scalable. Level 3 systems are taking over the whole driving tasks in specific situations. They are expensive, limited, and not yet mass market. Meanwhile, in China, lower level 2 and level 2 plus systems, the real volume drivers that collect billions of kilometers of data, are already standard. They are everywhere. They are improving monthly. This is the part many German executives don't want to admit. In autonomy, real power comes not from the perfect product, but from massive deployment and massive data. China is building a data ecosystem. We are building beautiful engineering. Only one of those scales globally. Volkswagen Slide, a wake-up call. For years, Volkswagen led the world in innovation output. Today, sixth place globally. All top 5 spots are now Asian brands. Anyone in the industry knows what this means. Delays in software, slow platform execution, and internal complexity have taken their toll. Meanwhile, investors have noticed shares are stagnating or sliding while Chinese EV and tech mobility companies surge ahead. This is not a temporary dip, this is structural. The strategic illusion we must abandon. We have to stop thinking autonomy is just a feature inside a car. It's infrastructure, data pipelines, AI ecosystems, and networked services. China understands this. Silicon Valley understands this. Germany is still thinking in terms of model cycles. Autonomy is not a model cycle, it's a platform war. And in platform wars, second place is nowhere. The market is not waiting. The CAM study looked at more than 750 real innovations, half of them already in production. This isn't a prototype race, it's a deployment race. And in deployment, Germany is not longer setting the pace. If we don't change course fast, we risk becoming what we feared for years, high quality component suppliers, while others control the ecosystem. Here are 5 key action items for investors. As somebody deeply embedded in the German auto industry, here's what I would tell any serious investor looking at mobility, autonomy, and auto tech over the next decade. Number one, prioritize companies with scalable ADAS level 2 and level 2 plus ecosystems. As a short reminder, level 2 will take over steering and speed control in specific situations. The biggest returns will not come from premium autonomy features, but from mass deployed driver assistance systems that generate data and recurring upgrades. Point number two, favor OEMs or suppliers with strong software verticalization. Look for firms that control their own AI stacks, simulation systems, over the air updates, and data loops, or ones partnering with top tier tech firms. Point number three, increase exposure to Asian and especially Chinese mobility innovators. Their speed, data scale, and regulatory support put them on track to dominate autonomy economics. Point number four, seek out infrastructure and cloud connectivity plays. Autonomy will run on ultra-low latency networks, edge compute, and massive back-end platforms. The winners may not be car companies at all. Point number five, watch for German consolidation plays. Expect partnerships, mergers, and platform alliances as the traditional OEMs scramble to catch up. Early positioning could offer asymmetric upside. And now, as a manager's honest view, we Germans have built the world's greatest combustion engines. We built benchmarks in safety, quality, and mechanical precision. But the future belongs to those who build platforms, not pistons. To those who move fast, not perfectly. To those who deploy, not just design. The window for leadership is narrowing. But if we act now with focus, partnership, and serious investment in software and AI, we still have a chance to shape the next era of mobility. I hope you enjoyed that podcast and the insights it brought for you. If you want to have more great perspectives on your product development, on your interdisciplinary collaboration, or just on your own well being, get in touch with me at systemgorilla.com. My name is Seb, and I wish you have a nice day.